right, to want self-regulation unless it's actually personal. So on this front, we have Kristi with us once again, joining us from day one now in day two. And of course, as well, with Scott Thiel. Is that right, sir? Come on up.
Well, we were just noticing that it doesn't quite resemble Scott, but that's all right. We were just asking Jeff to take the stage. Come on down, Jeff.
We've upgraded to a better-looking moderator.
Thanks. Although I'm not meant to be the moderator, we thought we'd change things up a little bit here, just because that's like how we like to do it. As mentioned, my name is Kristi Swartz. I'm a partner at DLA Piper. And Scott Thiel here, also known as Jeffrey Choi. Scott and I used to work together at DLA Piper. He was a partner there until he basically, recruited me, left me, and joined TOKO, which is his baby that he set up. In all seriousness, I thought it'd be great to kind of switch the roles around a little bit because Scott does come from, of course, a legal background, but it's a great story that we have about TOKO. TOKO is a wholly owned subsidiary of DLA Piper, and we're super blessed to have Scott with us. And the guy knows more about technology than I would probably ever know, so hence the other reason why he's a great person that was meant to be the moderator, but we're going to kind of take turns with this. So on that note, I wanted to start out with the first question to Scott, and maybe in line with our topic. Can you tell us about your kind of journey with TOKO and what caused you to do it? What were some of the things that jumped out at you that you were seeing that made you decide to jump from being very nicely paid lawyer partner at DLA Piper into the entrepreneur space? And what are the challenges I think you've seen while doing this? Is the market ready for TOKO?
Thanks, Kristi. Great to be here again today at SIS. I think the purpose of this is about regulation. That it's to give a sense. But what we're going to do is try and use TOKO as an example of why regulation, what it means practically from a good and also perhaps from a challenge perspective, and then weave it back into me actually performing something of a moderator role and throwing some questions back at Kristi, but let's call it a chat rather than a moderated session. So TOKO was really ideated in the context of this wonderful thing called distributed ledger technologies and the promise that it provides to create a more interesting, a more inclusive, a more dynamic, a more liquid capital markets infrastructure. And capital markets sounds like a big scary thing, but I think what we're talking about here is the ability for more people to participate in the financial services ecosystem, to have their own assets that they can fundraise against, or indeed to invest in other people's assets in smaller, fractional and liquid ways. And we've seen through cryptocurrencies and more latterly, I guess, NFTs, the excitement and the buzz and frankly, the want. Humans want to do these types of things. Unfortunately, traditional finance has only allowed certain humans to do these things, either big corporates or very rich humans that can play in regulated assets as professional investors, for example. And so part of the rationale for this was to democratize finance, to democratize participation, to help create an ecosystem of virtual assets that allows for more creativity and more participation. So that was probably the driver. Plus, I was very bored being a lawyer, let's be honest, and this is a bit more fun. So turning this to the regulatory piece, and this is where it gets interesting, because as we start moving from unregulated digital apes, and Kristi happens to be a fan of the digital ape, I personally have some challenges with the current valuations, but as we move from that kind of single NFT, single asset kind of JPEG type world into more interesting and more complex things, whether it's fractional interests in artwork or fractional participation in real estate or tokenization of funds, essentially the ability to tokenize anything, the law gets complicated. It really does. And the law was written for traditional finance. It's siloed and the entire ecosystem of assets really has been regulated along fairly defined different silos. This wonderful technology is allowing people, asset owners, and more people to crash across these boundaries and find themselves in the regulated space quite easily. So if I have an NFT I have one asset, maybe a piece of digital art, and I create one NFT. No problem, unregulated, I sell it to one person. At this point in time, in most jurisdictions, and we'll come on to this, that's an unregulated asset. Go for your life. Then I come up with a good idea. Wouldn't it be interesting, because these digital apes now are worth quite a lot of money and not everyone can afford $300,000 for a JPEG. How about I break it up into 100 at $1,000 each or $3,000 each? Yeah? All of a sudden, this is suddenly probably a security or a collective investment scheme or some other fairly complex regulated financial instrument. And if I'm in the business of selling, buying, dealing in these things, suddenly I'm at risk of going to jail in one jurisdiction or the next. And it's a very simple twist of a structure, and it shows how this technology is enabling people to do things that perhaps traditionally were only the purview of fund managers or investment managers or banks or other financially services regulated players. So that's the challenge. What we've done with TOKO is we've allowed people to come in and now create these assets. But there is a misunderstanding, I think, that you come in, TOKO can just mint the asset and that's easy, which is why Kristi and I speak to each other every day, usually several times a day, because as you structure these deals, it's really important that you get it right. And I spoke about this on the panel yesterday, that it's very important that the transaction is structured in a way that doesn't breach in Hong Kong the Securities and Futures Ordinance or some other rules. And if you do, there are potentially significant consequences and enforcement actions. So that's the point. Now, the world, without doubt, the world wants to do this. We have asset owners all over the world coming to TOKO, coming to DLA Piper and saying, we want to do this. We have lots of investors wanting to buy these things. So why have we not yet got a vibrant security token ecosystem? And this is the challenge. The regulatory frameworks are not catching up, or are yet to catch up. So Kristi, back to you, because you're getting governments around the world now reaching out to you as one of the preeminent virtual asset lawyers on the planet and saying, Kristi, can you come into my jurisdiction and help me design a framework that protects investors, that does the things that we want to do that are right and good for a proper operating marketplace, but actually enables these ecosystems to get going. So I'd be really interested in your perspective on what's happening in the world, what are you doing, and what are the key elements around that?
Sure. So some of the things happening in the world, as Scott mentioned, it's without a doubt, people want to do these types of transactions and they want to do these deals. It makes sense. It's right for the picking. However, you don't have a lot of the kind of necessary people to the party yet. I think if you take a look back in the past year or so, we were hoping that some of the part to the puzzle would be fixed. I think some of them are getting there. We're basically further along now than we were then, but perhaps not as far along as we'd like to be in the security token space. As for governments, as for regulators, we do a bit of work in that space. And when they come to us, they say, what do we need to be doing and how do we do it? Sounds pretty simple, sounds very easy. No problem, we have this thing called crypto. Yes, crypto assets, yes. What does it mean? What do you need to do with it? And as Scott mentioned, you've got TradFi, you've got the traditional finance, and so like a place like Hong Kong, come on, that's basically the bread and butter of Hong Kong. It basically makes Hong Kong tick. And so when you try to add on to it, you've got legacy issues and problems around what you can basically add on. Because unfortunately, I think some, and I'm not saying Hong Kong is particularly guilty of this, but I think some people want a quick fix. And this is just something you're really going to have to either overhaul, or as we mentioned yesterday on Alice and my panel, we said, I think you may have to actually look at even possibly a new regulator with new laws, and that's a big job. So when people are asking us, okay, so we want to draft new laws, for instance, what does that entail? Well, if you're a regulator, you look at it and you say, oh gosh, I've got to draft the laws, and I've got to make something that's fit for purpose for the jurisdiction, super hard. Then I have to basically launch that, pretty hard too. I've got to bring all the market participants to the jurisdiction, because what's the point in drafting it and say, draft it and see if they'll come? That's not particularly probably viable in many jurisdictions, or desirable anyway. And I think finally you basically have to say, is it sustainable? Because once you get the market participants there, and once you basically have the laws and the regulations in place, if basically you have no sustainability, people, as soon as the next jurisdiction comes along and puts a fix-it Band-Aid over things and jumps to the next jurisdiction, people in this space, unfortunately, have seen in the past a jurisdiction hop. It's what we call jurisdictional arbitrage. You basically look for a jurisdiction that can do things that you like to do a little bit better than somebody else is doing it, and just you jump over there, and hopefully the cost of doing so isn't excessive. So as a regulator, as I mentioned as well yesterday, I would hate to have the job, because being a regulator just is a thankless task at the moment, I think, because you just tell a lot of people no. Nobody likes what you have to say because they don't think you're doing anything about it, or you're not acting quick enough. So I think the role of the regulator in this space is critical, because of the view that for the first time in my 26 years in Hong Kong, I feel that this is an area that's basically asking to be regulated. It's and was begging to be regulated, and to say, can you give me some certainty around the regulations and some of the requirements of what we need to do to get licensed? And then after you have that in place, how long is it going to take me? Because traditional finance and licensing in Hong Kong, as many will know, looking at Karina, it's a tough process. It's a tough, expensive, long process, and only those who are really in it to win it basically will succeed. So I think the role of the regulator is paramount, because once you get the laws and regulations in place, you have to have a pretty vibrant or pretty enthusiastic regulator who will take a look at what's happening in the industry, and they'll basically look to see, do we need to tweak things, and then that they can do so quickly. Because otherwise, the law is reactionary. We don't exactly pass laws just because that's what we do, and people think, oh, I've got nothing better to do, let's go pass a law today. So I think that's the problem, is that even if you get the laws in place, you've got to have a regulator that's pretty dynamic and is willing to basically move with the investment community in doing so.
I'm going to ask one supplement. You touched on the role of the regulator, and it's an interesting one to me, and we've obviously seen different approaches from different regulators around the world. The role of, I think, every particularly sort of financial services or securities regulator clearly includes investor protection. But is that where it should end? Because we are seeing some regulators who are clearly of the view that they're trying to create a vibrant ecosystem for the market participants, and there are some who are stuck on investor protection as their primarily, if not even bordering on only perspective.
Yeah, so I think in that respect, I'll comment from a Hong Kong perspective. I think Hong Kong is a little bit, I find it super interesting. A lot of things have gone by in the last 26 years that I've been in Hong Kong. But the one thing that still sticks out, and I think probably everyone remembers at the SFC and others who've been around, is the Lehman mini bond fiasco that we had that went on for a long, long time. And the SFC, I think, has a very long memory of kind of the investor protections, or the lacking of investor protection around the mis-selling of the supposed purported Lehman mini bonds. And so with that, I think the regulator has, especially Hong Kong, I think most regulators have consumer protection, investor protection at the forefront, but I think Hong Kong, unfortunately, it blinds us slightly because people say we're just not going to have one of those again, come what may. So I think that's some of the issues we have around, basically professional investors, as Scott mentioned earlier, just only the wealthy individuals can basically do certain things because we have a real protectionist feeling towards retail. We think that retail couldn't possibly know how to do things. So the SFC, they're here to save us, and goodness, we're so happy that we have them. And I say that in jest because I think they do a pretty good job, but I think they're just a little bit gun shy around things that have happened in the past, and I think we need to move with it and go forward. But I think the other thing that we always see, governments and any regulator, AML, KYC, FATF, there's a lot of movement in this space. There's a lot of people basically on the gray list or moving towards the gray list, which is a pretty undesirable place to be. And I think when people are trying to get their heads around crypto regulations or virtual asset regulation, it becomes super difficult for people to try to balance, if you will, the consumer investor protection piece versus the AML KYC. And I think anyone that's in this space realizes it's not a place where you can say, oh, I can't do that or else I'm going to lose the business. It's a pretty de rigueur requirement and request for people to onboard clients to do AML KYC. And I think that's just a discussion that you're just not going to have too much of going forward, because FATF has been pretty aggressive in the last few years, and I think Hong Kong, we waver and we hover a little bit over being a little bit kicked down to the grey list, and I think that's a big fear for some place like Hong Kong to be anywhere near that side of the AML KYC regime. So I think I'm going to kick it back to you, Scott. We talked yesterday about, and it was discussed, should NFTs be regulated? A lot of people think they're super harmless. We know what TOKO does. We've seen, tokenization, what it can do. There's all sorts of, fascinating things that can happen with tokenization. But let's talk about NFTs for enterprise. And where do you think this is going, or are there any challenges? For instance, I'm just going to say it. Do you think they should be regulated? Are they harmless?
They clearly are not harmless, in that what we've seen is the explosion of multi-billion-dollar marketplaces like OpenSea. And funnily enough, unregulated multi-billion-dollar marketplaces have become a great place for fraudsters and others to operate. And so there has been a huge amount of harm done, and I think we are going to see a lot of people that lose money, a lot of concerns, a lot of mis-selling, and really the same principles of any investable asset. Do people understand what they're buying? Do they know what they're buying? Is it clear what they're buying? And I think what we've seen with unregulated markets, where you don't have to provide any level of disclosure or information, or indeed in some cases no level of AML KYC of the people buying it, is this creates problems. So I think without doubt they should be regulated and need to be regulated, but not in a way that closes down the innovation, the creativity and the opportunity, but actually will foster a growth in the market. Now, the concept of NFTs for enterprise, which it's a broad statement. We were chatting about it in the Investor Lounge beforehand. You are not going to get large-scale corporate businesses engaging in consumer channels with NFTs and metaverse strategies in an unregulated environment, where there are horror stories happening about rug pulls and frauds and insider trading and market manipulation and all of these things. You're just not going to get. You'll get the crypto kitties and you'll get those, the Web3 natives and all of that. But actually the real world kind of large scale adoption of this technology within the enterprise will benefit from a degree of regulation. So one of the things we're doing with TOKO at the moment, we've just received confirmation of our provisional license in Dubai to run what I believe will be the world's first regulated NFT exchange. And we're in the process of setting that business up and launching the technology around that. It's going to provide a means by which the enterprises, the corporates, those who want to do it properly, to actually safely, securely and in a compliant manner build, launch and deploy their own NFT strategy and access a marketplace that is compliant with all of the types of rules that we know and expect from other marketplaces. So identification of investors, from disclosures about the underlying assets and what's actually going on in there. Combined with obviously the kind of trust layer that comes with a regulated service provider like TOKO, and the assurance that comes with the legal advice. And when we launched TOKO nearly 2 years ago now at the Hong Kong Blockchain Week, we did an NFT project. I didn't know the acronym NFT at the time, but we worried about things like it was an NFT of a physical piece of art. We broke up into small pieces. We made them non-fungible by putting a different part of the picture onto each of the tokens by breaking it up. We got a waiver of moral rights from the artist to chop up his painting, not the physical one, just the image. We got IP assignments and flows, and we baked that into the token. We gave the people who were buying those tokens very clear documentation about their 1/16th interest in the physical painting and their 1/16th entitlement to the capital gains as and when the painting gets sold, and all of these types of things. Now, again, this is going back nearly 2 years now, but these are the types of projects that I think will take off in the near future. The digital art NFT has been fantastic because we've seen how there is a desire for this. We've seen the creation of a lot of ecosystems and a lot of creativity. But as we start pivoting NFTs towards other activities, whether they're redemption tokens for retail goods manufacturers, whether they're SKU tokens for inventory management, whatever they might be, they will benefit from this type of regulated exchange that brings the comfort. Because if you want to get an enterprise to do this, you are going to have to sit there, sadly, convincing the general counsel and the head of risk and the head of compliance that this is all going to be okay. And rightfully, there is nervousness within the corporates about some of these issues. They don't fully understand the technology and they see a lot of negative headlines. So I think it really is essential that they are regulated and we move in that space. And unfortunately, I think in some markets where the horse bolts as happens with technologies, and you see marketplaces just taking off, and then regulators coming in after the fact and regulating through prosecution, and that's a destructive force. It creates a negative energy, a negative perception of the entire industry, and that's of no benefit to anyone who believes in the future of this technology and how it can be adopted for the benefit of humanity as a whole. So for all those reasons, I think it is really important. I want to throw it back to you, Kristi, because we've got this evolution of different asset classes. We had cryptocurrencies, ICO booms, fundraisings. We had NFTs, and they've gone through a kind of a bit of a bubble in the first generation. I think we're about to see the second. We've talked about the challenges of security tokens and asset-backed tokens and the need for regulatory reform around those. Let's do a little bit of a year in retrospect. The best part of 12 months ago, maybe more like 10 or 11 months ago, we were at the SIS conference here in Hong Kong, a little east of here it was, and there was a lot of excitement in the room about the future of this industry, about the future of Hong Kong and this industry. How do you think if we go back to our expectations, sitting in the lounge there, to where we are today? Have we met the expectations? Have we exceeded them? Have we failed? And what are we going to do to ignite the ecosystem if indeed we haven't progressed enough?
Yeah, sure. Being the eternal optimist, I don't like to think that we failed, but I have to say, we came off of a little bit of a high last year when we were at SIS. I'm not saying this is not coming off of a high because of SIS, but it was because we just had people, NFTs, people finally understood, kind of what, Bitcoin. I always refer back to my previous firm when people said, Kristi, FinTech, it's a great, I guess, thing to do, but it's not a real practice. And quite frankly, that Bitcoin thing is really annoying. I just wonder when it's going to go away. So we moved past that because we realized, Bitcoin doesn't have to be, kind of the whole FinTech space. It's a part of. And so with the NFT explosion, we kind of came off that high and said, people look at the artwork, look at what we're doing. The next natural progression, at least where I'm hoping it still will go, and I think it's on its way, is the security token offering space. The problem we have with security token offerings is that you're missing some of the pieces parts, as I was saying earlier, to the party. So you've got kind of the TOKOs of the world, you've got the Angel Hubs of the world, you've got the DLA Pipers of the world. We get it. But unfortunately, we've got kind of humps in the road when it comes to regulatory and regulations. So this is where the jurisdictional arbitrage comes into play a little bit. Because if we're looking to do certain fundraising activities, or we're looking to do certain things, you have to look around for the regulations. And so that when we looked at regulations in different jurisdictions, as our topic suggests, we basically said, one of the biggest sticking points, and one of the things I think we're trying to solve for in the end-to-end solution, is how do we basically, from a TOKO, Angel Hub, perhaps, DLA Piper perspective, how do we get these types of projects off the ground into market? And I think we're just about getting there with having the right relevant players, in the space. I think we are missing some, and unfortunately, once you get some of the players in the space, the two people that somewhat have licenses in Hong Kong aren't really geared up to do some of the things that we were interested in doing. So I think you have then the sticking points there. Do you have actually the relevant kind of mindset to get it over the hump? So I think the year, I guess looking back for the past year, maybe not exactly where I hoped it would be, but I am hopeful that we're closer this year than we were last year, and realizing, because I think we didn't know what we didn't know last year. This year, we know that there's some missing links still. We've got to basically find relevant players to that and bring them to the party.
Let me offer a perspective on that, because I think you're right. I would say we're closer, but perhaps we haven't gone as far as we hoped we would in that time. That's a Hong Kong perspective. I think if we turn that perspective to what's happening in the Middle East, and we go back to us sitting at SIS last year, we didn't think what was about to happen. Who knew what was about to happen in the Middle East? We now know that Dubai in particular is launching a comprehensive virtual assets framework. It is encouraging market participants.
Exciting, even. Very exciting.
Yeah, it's very, very exciting. And I think from that regulatory arbitrage point becomes very, very relevant. If I if I have assets here and I want to do fundraisings with assets here and I have people who want to buy those things here, can I do those deals elsewhere? I think is the question. And there are other markets. Singapore is one, question mark where they are at. But I would say you answered the question in the context of Hong Kong. Not as far on, but it's one thing to be moving forward slowly. But if others are racing past you, where does that leave us?
Yeah, so I think that's a great point. I think, you know, Singapore, as I mentioned yesterday, I think they are probably slightly ahead of Hong Kong in this aspect of bringing relevant people to the party that can be licensed quicker. And I think Hong Kong has been a bit of a herd mentality, like I said, post-Lehman. But irrespective of that, where I think regulation's going is that, you know, places like the Middle East are basically seeing this opportunity and absolutely doing something about it, and they're thriving. They're figuring out what to do, how to do it. Perhaps some might say it's easier because they don't have a lot of the TradFi stuff to deal with, but I don't know that I agree with that because you still have, you know, they still have a central bank, they still have a securities regulator, just the same as we do in Hong Kong. They're about, you know, half the size of Hong Kong population-wise, but growing by the day. So I think the thing is that, you know, consumer protection and, you know, FATF compliance will be kind of on their radar too, just number one. But I think with it looking to see, let's put it another way, the good, the bad, the ugly, where you probably don't want to be is in the US and looking how they're handling things if you are a regulator or a government. The land grab and the whole take me to your leader, I don't know where to take you, and if I wanted to be compliant, I don't know how. So I think regulations there have kind of probably gone a little bit to the extreme and to the fact that you don't even know where to go if you wanted to be compliant. So maybe just with the minute or two, Scott, that we have left, you know, do you think the STO market will take off Hong Kong? What's your bet? Hong Kong, other jurisdiction? If so, where? And kind of what are the challenges you see that lie ahead?
I cannot see it taking off in Hong Kong while we have a regulator whose view is they need to approve every single deal. I do not believe it is the role of a regulator to play market gateway for deals. It is their role to provide a framework of regulation and to ensure people follow them, but it is not their role to second guess the deals that are done within those rules. And I think one of the problems I believe is happening here in Hong Kong is no one may do anything without their approval, and that I think will prevent the market here from taking off, and until that changes is my view. I think we are going to see the security token market. I can share with the audience the incredible pipeline of enterprise engagement in this area. We have some of the biggest, you know, fund managers, investment managers, asset owners, enormous companies with, you know, hundreds of billions of dollars worth of assets that are now talking to us about digitizing and tokenizing that asset base. So it is, you know, it's not something that's maybe going to happen. It is clearly going to happen, and we now have the big players, you know, wanting to make sure it's happening, and they're coming to talk to TOKO and DLA Piper about, you know, how we do these things. The issue then is going to be where are we going to do it and where's going to break first. And, you know, what we're seeing in the Middle East suggests that it's very likely to be a market where this takes off quite quickly. I agree with your sentiment about the US, and I think the US tendency to regulate US investors regardless of whether deals might be done, I think will also limit US citizens, you know, US investor side participation as well. But I think it would be great to see that change, obviously, here in Hong Kong fairly soon. And, you know, there'll perhaps be a pivot. You know, fear will perhaps turn into FOMO at some point and a realisation that it needs to happen. I don't know. Right back at you on the same question. Where do you think the dam wall is going to break? Because I think we all agree it's going to break.
Yeah, true. I think it's not if it's gonna happen. It's not if, it's when. But when, I'm hoping in the next year. But I think with the advancement we're seeing in the Middle East, if I was a betting lady, as many know I'm not, I think I'd put my dollars on the Middle East to probably race ahead of everyone else on getting at least the regulations out there and to get. Basically get their grip on what's happening in this space and try to tackle some of the hard problems and questions that nobody else kind of wants to do. As I said, they kind of want to put a Band-Aid over. So that's my guess.
We're over time.
We are over time. So thank you again to W Hub, Angel Hub, SIS, and thanks for the invitation to be back again this year. Thanks everyone for attending as well.